Good afternoon, everyone, and thank you for joining us on the Travel Vault webinar. Today, I'm joined by our regular panelists from Travel Trade Consultancy, Martin Alcock and Adam Pennyfather, as well as our guest panelist, David Holland, who is Director of African Pride Knighton Reeve. As usual, all attendees are muted for a better sound quality, but we do welcome your questions. So if you'd like to ask a question or make a comment to the panel, please use the Q&A function at any time. We're recording the webinar and it will be available on our YouTube channel later today. To start us off, Martin will be sharing his insights following the government announcement earlier this week. And both he and Adam were speaking at the ATOL Finance conference yesterday, so they will be providing us with some useful points from that, as well as any other industry developments. David has also joined us to provide his perspective on the current situation and how his businesses have been trading through it. David has been in the travel industry for over 40 years and is currently director of the Knavesmere Travel Group, which, as I said, operates African Pride Knighton Reeve. David's been with the company since 2011, but he took over as director in 2017 after a management buyout with his business partner, Liz Hall. Both sides of the business specialise in holidays to Africa and the Indian Ocean, but Knighton Reeve offers a more luxury and exceptional experience. David, Martin and Adam, thank you for joining us today. So firstly, before we chat generally, Martin has prepared some slides, so I'm going to hand over to Martin to present.
Thanks, Chris. Afternoon, everyone. Let me just get the screen up. There we go. Hopefully you can see the slide deck there.
Yep, thank you.
Yeah, good. Perfect. So look, nice to be here again. Nice to see everyone. I don't know about you, but for the last few days, I've been wandering around with this strange feeling that I've been struggling to come to terms with a bit, to be honest. It's very unfamiliar. And I think what it is optimism and hope. It's really is something I'm struggling to get my head around because it's been a while. But, you know, I had absolutely assumed that Monday night's announcements would disappoint again, and we'd be roundly ignored in the various steps that were set out in this roadmap. And I fully expected to be here at this presentation repeating all the same pleas for support and clarity that we've done to death on the previous webinars. And so after months and months and months of asking, it finally feels like we at least have some sort of roadmap for the path ahead. Now, look, yes, it's vague and full of riddles, this map, and it is going to be challenges. We might find that we have to make our way through a series of booby traps like those kids in the Goonies. But the announcement, I think, felt momentous all the same. You know, for me, what was as important as the dates that were laid down, because we definitely have to be skeptical about those, but what was as important as the dates that were laid down, I think, was just the tone of the document, the 50-odd page document that was published at the same time. And if you haven't had a chance to read it, I'll cover off some of the points that were in there, because it was just a massive departure from anything that's come out so far throughout this crisis. Just the language just was so much more supportive and had more empathy, I think, towards the travel sector. It also just came across as understanding the particular challenges that we face and the particular nuances of travel. I think more than anything that's been put out before. You know, admittedly, that is a very low benchmark, but let me just give you some examples. So there were language like that the government were pledging to work with UK representatives in the travel sector. They would be adopting clear and consistent international standards. And on a number of occasions, the text specifically mentions building time into the decision-making process, where they will be reviewing each different step of this roadmap to allow businesses and individuals to make changes and to have a notice period of a week. And so, taken on face value, and this is obviously only words at this point, these are all major improvements, and it's the sort of stuff we've been crying out for ages. And when there are inevitable setbacks on the dates and the timetables, we definitely have to assume that will happen. It hopefully means that we're a bit more prepared, and we'll avoid some of the more farcical scenes of these last-minute decisions and things that we saw over the course of the last 12 months. But there are obviously lots of challenges ahead. You know, elsewhere in the document, I think we're all scarred really from what you might call false positives of the last 12 months. And so in various parts of that document, there are also some slightly more ominous or slightly more, I guess, cautious wording that we need to be aware of. You know, the whole euphoria of how this whole thing has been presented in the news, it really bears more than a passing resemblance to, for me, last July when Spain was first added to the travel corridor list and everybody went nuts. And of course, we sort of remember how that turned out. And we have to remember that whilst we do have a roadmap, this government is certainly not averse to the odd handbrake turn or two and maybe sort of spinning a couple of donuts along the way. So alongside that report, the roadmap, you know, it reminds me a little bit of the old "Here Be Dragons" that you see in the old treasure maps. Three kind of jumped out at me. One is that the government timetable is entirely reliant on this idea of identifying what they call variants of concern at the border. Clearly, that's an ever-present threat, and we've already seen a bit of that. But this idea of identifying at the border heavily implies that testing is here to stay, and quite possibly quarantine and hotel quarantine. And so even if we do get back to some sort of normality this summer, which I think is a big if, you have to assume that all of those complexities will still form part of it, and all of the associated costs that go with that. The report also talks about a system of allowing vaccinated individuals, specifically vaccinated individuals, to travel more freely internationally. So strongly implying vaccine passports are central to this. And just, again, another indication of these handbrake turns we've seen, because it was only a month ago that the government ministers categorically were ruling out vaccine passports. They're now are formally ruling them in, basically. So, you know, you do have to bear that in mind. The final point for me was that the decision on international travel will be dependent on the progress of vaccine rollouts, both here in the UK and abroad. And that is really important because, as you probably know, from the data that we've seen so far, the UK is streets ahead of other countries around the world, barring possibly Israel, in percentage terms. You know, phenomenal efforts going on to rolling out this vaccine. But you can see, and I've just put on here just a sample of typical holiday destinations and their latest data. This is all from the central data source of Oxford University. And you can see that these are the percentage of population in other popular countries that have had their first dose of the vaccine as well. And on the assumption that all of these countries open up in the same sort of way that we are talking about opening up, you can see there's a lot of catch up to do between now and the summer if summer travel is to get back to some sort of possibility. The speed, I think, of the recovery of destinations, and we've talked about this before, a slight variation, I think it is going to be related to the speed of that vaccine rollout and the success of the vaccine rollout, but also how dependent different countries are to tourism. So a much more lukewarm attitude in the Nordics and Northern European countries around this, compared to the Greeks and the Balearic Islands, who are straight out of the blocks, desperate for air corridors or bilateral arrangements, and willing to talk about accepting people who are vaccinated before there's any real kind of plans in place. So I think you start to look at what are the impacts of only people who are vaccinated being able to travel. And when you overlay the timescales for people being vaccinated on top of that roadmap date, I think we're talking about having all adults in the UK vaccinated by end of July. And so by the time you can realistically expect summer bookings to take place, that is also going to rule out a large part of the demographics, potentially quite a lucrative demographic of people who are lowest down the pecking order for getting a vaccine. At best, it's an ultra late market if summer holidays is what you're selling. But, you know, again, don't want to take away from anything. It's all heading in the right direction. I think when I was looking for evidence of the positivity prior to Monday's, pulling these slides together prior to Monday's announcement, there was two things I could point to for this optimistic evidence that there is pent-up demand. The first is this household savings ratio. I think we've talked about this before. It's a measure of the proportion of disposable income that's been saved by UK consumers. And you can see the data there going all the way back to the 1960s, and no mistaking that spike that we've seen over the last year. So if that is true, and the latest data is for the most recent quarter is due out in a matter of weeks, and there's a good chance people have maybe spent all of that at Christmas, but let's hope not. But that certainly implies that consumers have some money to spend. A slightly more recent travel example, I suppose, is what we saw in Dubai at the end of last year. So this chart is an IATA chart showing flights, and you can see, concentrate on the blue line. That was the number of flights, number of people flying between the United Arab Emirates and the UK. And you can see for most of the last year, it was down at minus 80%, more or less, where all flying has been and all travel has been. And then the government announced this air corridor on the 12th of November, and instantly it shot up. And actually, for a brief period of a few weeks, it was trading ahead of 2019 levels. Now, yes, most of that spike was largely driven by Instagram influencers and yoga tubers and most of the cast of Geordie Shore. But these are people who are paying guests, and we shouldn't necessarily turn them away. I think Tuesday and Wednesday of this week really have seen more evidence, certainly in the press, of pent-up demand. It's too early for us to have seen any actual data to sort of validate any of this, but certainly the press reporting is hugely optimistic, even if I do think certain people in the media struggle to get their head around percentages. A 600% increase really is only impressive if the starting point was impressive, and when the starting point was zero or next to zero, it's not that big. But optimistic stories are nothing new. These are the stories that were doing the rounds in January. The narrative in the press was very much that our nation's pensioners were coming out to the vaccine centre, wandering down to the travel agent and making a booking immediately. And that was very much the doing the rounds in the press. What we actually saw, again, the most recent data we've got available, the first 2 points on there are from Barclays spending reports. So this is all spending going through Barclaycard. Barclaycard account for getting on for 40% of all card spend, so pretty large sample. And in January, this is up to right to the end of January, airline spending still 82% down, spending with travel agents and tour operators still 87% down. And at the bottom there, you can see this is the January web search data, still, and this is a basket of tour operators and OTAs, all of the sort of big names are in there, still 80% down. So for January, at least intentionally, nobody was particularly looking to travel, certainly in the mass market. And I think that's all the more worrying because that was January, and we know that January is absolutely pivotal to having a good year and to the overall, in a normal year, the overall booking conditions. So the results of a horrendous January trading period, not to mention just the compound effect of the last 12 months, is that many of the travel companies we're working with are running on fumes. I think balance sheets have been absolutely destroyed by this, and I know Adam and I have talked about this quite a few times on these webinars. Number of common reasons for it, which we've covered before, and there's a few listed on the slide there. Straightforward debt drawdowns or borrowing money under government loan schemes. We've got clients who have drawn down on what they usually use as a revolving credit facility, like an overdraft, just to cover a seasonal low period, and have been now drawn on those for getting on for a year. And that's very expensive. It's increasingly unsustainable because they can be pulled at any time. The other issue is refund credit notes really are coming home to roost. They were a lifeline back in April. I am still convinced that scheme is the reason we haven't seen many more failures in travel. It has helped to prop up travel businesses, but there's no getting away from it. It is now a millstone around operators' necks. There's quite a few that I've seen that I just think are unable to deliver on those obligations and provide the holidays because the money has gradually dwindled away. And so customers are now expecting either a refund or a holiday to be granted. And as things open up, it is going to be difficult. What I think the travel sector desperately needs, and we firstly, we need some extension of the government support mechanisms that we'll see that in the budget next week on March the 3rd. And Adam might cover some more detail on what he expects there. But I think the extension of furlough, the reduced VAT rate, the extension of government loan schemes, I think they are all vital to helping us get back to getting through this really difficult period. But I think something more pressing, or certainly is going to become more pressing, is this need for more equity into the sector, actually. I think lots of people have borrowed, lots of people have built up debt in one form or another. And, ultimately, they're going to need equity to be able to sort of improve that balance sheet for a number of reasons. One is to just keep at bay the legions of stakeholders who are very nervous about the sector. But raising equity up until now during a pandemic without any visibility hasn't been an attractive option or realistic for many companies. Partly that is because you can't get too many investors interested when there is so much uncertainty. But I think that is definitely changing. You know, even just in the last few days, whatever you think about the reality of the recovery, investors are looking at it and saying, well, if this is the start, we want to get in early. So we are already starting to see that happen. The other issue we saw before was that obviously when valuations of travel businesses are so low, the amount of dilution you'd have to take in your equity ownership to raise a meaningful amount of money just wasn't attractive. And so we were having plenty of conversations with people who would say, I would sleep a little bit easier at night if I had a bit more in the bank and another shareholder, even if it was just sort of 15 or 20%. But the amount that they want for the amount of money that would help me to sleep is too big, so I'm just going to soldier on. Now that things are starting to improve and hopefully as that optimism continues and we don't see any further setback, then maybe that changes the dynamics, and it might well be something that people should look at, because I think equity injection really is the only way we're going to solve these problems throughout the supply chain. You know, right now, the current situation in travel generally amongst the supply chain reminds me of the of WrestleMania and the Royal Rumble. The rules are there are no rules, and it's everyone onto everyone. You know, everybody is fighting with each other. I'll let you decide who, represented by the little fella in the Union Jack underpants. Maybe he's a metaphor for British tour operators, and it's the regulator hitting them with that wallpaper pasting table. But, you know, when this started, it was really the first phase. I guess the first battleground was customers against operators, customers against airlines and agents, and they were demanding refunds, and those refund credit notes did help. They were sort of an uneasy compromise between getting customers, keeping them happy with something, getting them something back, but preventing all of the cash leaking out of the business. But what we've seen since then is the battleground just moves throughout the supply chain. So on a daily basis, we are now acting as referee on arguments between operators and travel agents. Operators are nervous that the agents are going to go bust with their money, and they're not confident that the ABSA scheme would necessarily support them, for example. We're seeing low-cost airlines being sued by operators because, you know, high-profile case being Ryanair won't recognise the legitimacy of the operator and wants to deal directly with the customer. You've got regulators tightening their demands. Lots of our clients are being press-ganged into pushing trust accounts in place and that sort of thing. We've still got this huge problem in the insurance market, something close to market failure, I would argue, where getting insurance bonding, all kinds of insurance, actually, FFI obviously has been a challenge for some Travel Vault members, but bonding, supplier failure insurance, even just professional indemnity insurance, tour operator liability, all of that has become a real challenge. We've got merchant acquirers giving people notice and demanding trust accounts or terminating people at very short notice. So it is a real challenge out there. Equity would go some way to making some of those guys less nervous and would help just prop up those balance sheets. And so that may well become more necessary as we go through this. So to be absolutely realistic, and you know, you wouldn't expect anything else from me from these things, even with the fairest of fair winds, and you know, no variants none of these sort of COVID variants, no spike in the R number when things open up again, no vaccine scandals or shortness of supply, no government U-turns, all of that stuff. Travel is in a really difficult position. I think it's fanciful to expect that it's going to come back immediately to the good old days of last summer or the summer before last, 2019. It is going to take time. I think it's realistic to expect that there will be plenty of restrictions and, you know, there's a real mess to unravel. But look, everything looks far rosier than it did on Monday morning, you know, just in a few short days. And I think we should really take that, and that is a real sign of positivity. I think if nothing else, you know, you've finally heard some optimistic, positive words from me on these webinars, and that's got to be worth celebrating. So that's all I had to cover off. I'll hand back over to Christina, but very happy to talk about any of these points or answer any questions.
Thanks, Martin. And it is really nice to hear some optimism. I think many of us were actually pleasantly surprised by Monday's announcement. I think one thing that I noticed that you talked about, obviously, a lot of the factors that were going to need to be taken into consideration for travel, but ultimately I think it's dependent upon a report by the Global Travel Task Force. What do we know about this from that 60-page report, and how is the industry being represented on that?
Yeah, it's for me, a positive sign. I mean, it ideally would have been a slightly more prominent body throughout all of this. But from what I understand of how government works, this is a body comprised of government departments. So it isn't necessarily going to have like an ABTA or a CAA or a consumer organisation sitting on it. It is all of the different aspects of government, and that's because government needs to be seen to be the one in control of, from a health aspect. But it clearly is listening. Not in the public domain. I think there's been a lot of fairly noisy campaigns that have created a lot of attention in the media. But from what we understand, there's been a lot of back channeling going on with the government and various experts, whether they be airports or from various large travel companies. So I think it's helpful that the government have reinstated that. It had a very limited scope the first time round and disbanded when that report was done, and now we're back with another report. Like I said before, just the tone of the document is completely different to anything I'd seen before. And it does just, I think one of the major criticisms we've had over the last 12 months is anytime you get a government minister on the news or even at an ABTA conference and you ask them a question about supporting travel, their default position is to talk about airlines. Well, we have supported airlines, or we are doing this for airlines. And almost there was that lack of knowledge about travel is a much broader church than that. So that's a really positive sign, I think.
Yeah, definitely. And I think having spoken to a few members this week, I think people are ultimately a lot more positive about it. David, how did this week's announcement affect the mood in your business?
Yeah, I think it is a bit of a skip in our step because anything that is more positive than it was Monday afternoon came out Monday evening. And so, yeah, we're very grateful for that. But I think it's the point Martin just made is a very good one. I do think the government concentrates more on airlines and airports rather than the wider industry. And I think if some good has come out of this as well is that with all the official lobbying, the behind the scenes lobbying, the letters to MPs, the meetings with MPs that so many people in the industry have had, predominantly at grassroots level, I just wonder if that message has begun to drip feed through a little bit, and there is more of an awareness of the industry of travel now rather than just the industry of airlines and moving people. So I think that has to be a benefit as well. I think the announcement varies depending on the market you're in, depending what seasonality you have. I mean, our seasonality as an African specialist is not for summer here, it's for summer in Africa, which being Southern Hemisphere is mainly November through to March time. There is good business to be had in our summer, but the bulk is November through to March. And I think because of that, the booking pattern and the seasonality of travel has been an interesting one. And so it was so important, therefore, the government to make announcements that were hopefully going to make travel start this summer, as it has done for 17 May, for the wider industry. That's important to us, but what is more important is late winter this year into early 2022 being fully open for travel for us, being very selfish, to our African markets. But yeah, wider industry, I think, is a positive thing. And I think, yeah, we all felt a little bit more positive Tuesday morning than we have done for a long time.
That's good. And your business operates predominantly through travel agents. Presumably you've had quite a few conversations with them this week. Have you seen evidence of this pent-up demand coming to fruition with bookings or inquiries, or do we think that it is just a bit more press speculation?
I think it's both. I think, maybe there's been some very interesting press releases come out. I did admire Derek Jones at Coroni. He tweeted something like, from 9 till 12 on Wednesday morning, our business was 3,000% up on the previous 3 hours. In other words, from 6 a.m. to 9 a.m, we had nothing, but from 9 a.m. to 12, we was up 3,000%. And I thought that was quite a tongue-in-cheek take on what some of those figures might be saying. But, around all that, we're dealing with travel agencies, as you say, over 90% of what we do is with them, and having spoken to a lot, and also quite a number of tour operators these past few days. It is mixed. I think if you look carefully at any wording, it tends to say the demand has been great for inquiries. I'm not so sure a lot of that is yet manifesting itself in actual physical bookings. I think people still might be reticent to some extent. They are busy, a lot of agents, but they're often rebooking holidays they had traveling in April and May that are now, they know they can't travel to move post 17 May. And one agent said to me that was quite interesting. He said, I've been banging on about UK holidays for the past 3 months and done a lot for the summer. Now, a lot of these people are coming back in saying, I don't really want my UK holiday now. I'd like to go to Spain for 2 weeks. But the manifestation of that, of course, is potential cancellation fees and penalties for UK holidays, which will be pretty full for the school summer holidays and very expensive. So I think demand of inquiries and demand of interest is very, very high. Demand for bookings, I can't speak obviously directly for these mass market mainframe European summer holiday operators, but I think it's a little bit of a mixed picture out there, certainly.
And we've talked about on previous webinars about, customers either being given refund credit notes or rebookings, and obviously Martin covered that. What's been the reaction from your customers over the last 12 months? Has it been very up and down and lots of bureaucracy and administration trying to cancel everything, or have you managed to keep those relationships going?
Yeah, we have, and we've concentrated on that. And one of the things, Liz, you introduced earlier as my business partner, and I discussed early on this, is that any cancellations that did come through, we wouldn't go down the refund credit note. This was before it was formally backed and authorised by the authorities, but even when it was. So any cancellations we have had, we have refunded, and as far as possible, pretty speedily as well. To be fair and give credit to a lot of our African partners who we've worked with a long, long time, they have been very accommodating in also refunding monies, which has obviously helped hugely. Not all of them have, granted, and there's quite a number of bookings that have cancelled where it has cost us money under our obligations under the PTRs. Most of what we had, well over 2/3, over 70% of our total business rebooked from last year to this. We're now beginning to start moving some of those rebookings now. So rebookings for the second and third time in some cases. We have one particular client through an agent who was adamant he was going to go away in April up until Tuesday morning when he rang us and realized now he couldn't. So he has rebooked. So yeah, I think all around we're very pleased with the way that we've handled our responses with our agents and the clients. And we have had some very kind comments back from a lot of our agents, which is great because that's where our relationship is. Our relationship is with our travel agents, and we pride ourselves on it and we work on it. So yeah, we refunded all that we've had to refund, and we still have a lot of people rebooking, which is great. It's hard work. You mentioned admin and bureaucracy. Yes, there is a lot of that. Demand from last year shifted to this year. That's going to now continue. So there will be areas, both geographically and in terms of accommodation, where space will be a problem, availability will be a problem. So again, we say to all of our agents, look, if you have clients who are teetering, think about the problems we may have going to Africa next year if availability is tight. So better to get that reserved now. So yeah, I think all around it's been tough, it's been challenging, it's been really hard work, but overall I think we've come through it pretty well and pretty positively.
Well, that's good. And you've obviously mentioned that you're more of a winter operator. Martin and Adam, do you think that agents and operators are anxious about taking bookings for this summer with the threat of having to deal with cancellations if there is a government U-turn or the report from the task force isn't quite as expected or hoped for?
I think so. I think just going back to the news announcements, I found them quite interesting. So decided to delve into a bit of data from some of our clients that we have access to. And bookings are up in big percentage terms, as Martin said earlier. The starting point is very low, and actually, the average I looked at was 190% up on last week, but still 90% down on last year. So that gives you a bit of an indication. The other interesting thing is this lead time, and that's gone from 140 days on average last year at this point to 234. I think both operators and consumers have learned from last summer that it's, you need to be cautious, and actually those bookings that are manifesting themselves are for Q3, Q4 this year or 2022. And I think that's playing it safe. So I think both sides have learned their lessons from.
What we were seeing before Christmas, Chris, was this. And we don't see it so much now because there is no prospect of travelling, but you could almost think of it as a polarisation of travel. So whilst, let's say, most people have an average booking lead time, and that might be a few months if you're short haul and something much longer if you're David's business. But what they would say is actually it's polarised to you either get people booking they want to travel tomorrow, or they're booking now for 2022 and sort of nothing in the middle. And that makes life horrendous for planning, it's really difficult. And so I could imagine when even during this summer, as things start to open up again, there's this initial clamour right now because the press is definitely whipping up a capacity sort of you might not be able to find anything, you better book now type thing. But I think even when things start up again, there are going to be all those restrictions and horror stories of, you know, countries being added to the red list and you've now got to stay in a hotel. That sort of thing I'm sure will happen. And so what that will naturally mean, I think, is people will either go 2022, that's definitely going to be out of all of this, I'll book now, or they'll go, I'll earmark that week, but I'm not going to commit anything until the day before I can.
And have you had any discussions with operators about their advertising strategies and whether Monday's announcements has got to impacted the approach they're going to take in terms of, because I know a lot of people have put that on hold for now. Do you think people are going to start advertising their holidays more?
I think that it'd be great to hear what David's view is. My view is there's a bit of that happening, and I think what we talked about before is this evolution of the advertising to be much more about flexibility. So if you book now, you can cancel, or maybe you don't have to pay me the final balance until a bit closer to departure. But this all plays to what I think is this is why coming out of this, we've been saying this for the last 12 months, coming out of the crisis would always be more challenging than going in. And these are now, we're sort of living through each of these decision points. Now, right now is the decision, oh my God, I'm reading in the press that bookings are 600% up. I need to turn on my pay-per-click. I need to get my guys back. That all starts the costs. And if this is all a storm in a teacup and there's a U-turn next week, well, that money's all sunk and you've spent it. So this is why it's just such a delicate balance. There's so much luck involved, I think, in timing it right.
Yeah, it's very tricky. David, what's your view on that, and what are your current advertising plans?
Yeah, well, I say, going back to the point we made about well over 90% of our business is with travel agents. You know, we've never advertised. We've never really gone to that direct arena, whether it be above the line or below the line advertising in any way, shape or form. So, you know, that sort of caveat of me discussing my view on it. But what we have done throughout this period is keep our profile going with our travel agents. And not very much with, quote, offers, unquote, but more a case of how about learning more about Africa? What about this aspect of Africa? What about this experience? So that when they can increase their knowledge and awareness, that when clients are interested, you know, they have that information at their fingertips, or they can use it themselves. I am involved in a couple of groups where tour operators advertise to travel agency groups on Facebook, for example, closed user groups. And every day I'm seeing some operators put 2, 3, 4, 5 offers a day. And I just, in the end, you know, it's white noise to me, but then, you know, I'm not selling the holidays. But I know agents who look at these and think, God, not another offer coming through. They get a little bit fed up with them. It gets a little bit too much. You know, we have a few that we've done selectively, and we tied a few in with a couple of TV programs. I mean, Greg Wallace was in South Africa for 6 episodes. January into February. We did 1 or 2 little things on the back of that to our agents for them to use out to their clients. But no, in that main advertising arena, it's not something we're involved with. And I do think, as I say, agents are managing everything as best they could, often on less staff, nearly always on less staff, and obviously without offices at the moment. And I think too much of that information coming down their pipe from operators does get lost, I think, a lot of the time.
And I think, as Martin says, it's all about the key messages that you're giving, really, rather than maybe the special offers. I mean, what steps have you taken to give your the customers the confidence, you know, to make a booking in terms of COVID and assurances?
That's interesting, because Liz and I, and as a business, we've always operated on a very flexible, agent client-friendly approach, and that's been our ethos all the way through. Yes, we have terms and conditions, and yes, they are there to be adhered to by both us and the client, and we have our responsibilities under the PTRs, absolutely right. But we're always very flexible in working with an agent, and always have been. If a client had to cancel for whatever reason, forget COVID for a minute, somebody, I don't know, breaks a leg and can't travel, we'll always work with them to try and decrease the cancellation charges, return as much as we can. We believe that's part of our relationship building for the future. So this has been very much a natural extension of what we've already done. However, we are very mindful that this is a very specific, named, very ring-fenced situation with COVID. And we have created or generated a COVID assurance, which basically is not specific in the terms of X lower deposit or change the date of balance payment to Y. It's more of confirming that we will do all we can. You have our absolute assurance. We'll do all we can to help you as an agent with your client. And I think by doing that, that helps them potentially financially towards the end. If we can return more than, return the full amount, but it helps us financially if we can return more to them that we don't have to fund ourselves because we've managed to get that from our suppliers. But also hopefully giving the clients and the agents some confidence that we know what we're doing and we'll work with them for their next holiday, whenever that might be. So I think that's something that from a control aspect, you know, we've been very able to do without necessarily having a definitive X, Y, and Z. It's much more depending on each individual booking, each individual situation, and each client and agent's requirements.
Oh, that sounds good. And I mean, we've talked about how the UK's vaccine rollout is going well, and it's going to enable us to potentially to travel. But Martin, obviously, you pointed out that it depends on the point of destination potentially as well. David, have you been speaking to your suppliers in Africa and their thoughts on this? And have you got any feedback from them on what's happening? Because obviously we heard or rumours potentially about Greece setting up a corridor. But what about the destinations that you offer?
Yeah, well, it's interesting. Since the very beginning of this, the only two countries that formally were able to be travelled to for a relatively short period of time, autumn last year, were Namibia and Rwanda. And then the government closed that down, you know, after about a month or so. Aside of that, there was then the generic FCDO advice not to travel. And I think the tour operators on here will probably understand all this because it's probably in their policies as well. But that then invalidates your tour operator liability insurance. So Liz and I decided again that, you know, we couldn't and shouldn't be traveling, sending people to travel with FCDO advice in place. Regarding destinationally, South Africa have just started vaccinating, Zimbabwe have done. Kenya, for example, is an interesting country. Their numbers of cases of COVID have been tiny compared to the rest of the world. And from other markets, the USA, for example, have been seeing people travel to Kenya because the USA equivalent FCDO advice, their state office advice, says something like just reconsider your travel plans if you go into Africa. Whereas we've got pretty much a blanket ban. It's up to them whether they do or not. So there has been some international travel from the US into these destinations. Conversely, Tanzania, just across the border from Kenya, their president very early on declared that COVID, the best way to address it was to pray to God and have herbal tea. So I think there is a very disparity between what some of these countries have taken on board. But South Africa's beginning to do a very good job in starting their vaccination programs. And interestingly, we talk to our suppliers a lot and our partners down there. And one of them said on a call a good many months ago that these COVID protocols that we have coming in are basically just almost an extension of what we've been doing anyway. Because when you go to the game lodges, they tend to be low density. So, and a lot of space. So you're not mixing with people like you would perhaps in a beach resort in the Med. So they've just upped the ante a little bit regarding what they offer relating to the protocols. And last year again, both South Africa and Kenya and a few other countries were granted World Travel and Tourism Council safe travel status, which meant that from the WTTC perspective, the protocols they had brought in, both at airport, public, the transport and also accommodation, was sufficient enough to be granted safe travel status. I'm not sure what impact that necessarily has had over here in the UK from a tick, because it's hypothetical, because people couldn't travel because of the FCDO advice. But it just shows, I think, that Africa as a destination is perhaps more forward thinking than some other areas have been. There have been other problems in other areas, I'll grant you, and not every country is the same. But it is pleasing that as and when the green light comes and people do start traveling, Africa will hopefully have most of its destinations ready, willing and able to accept them, because it is very much two-ended. Absolutely it is.
That's good to hear, though. Moving on to finance now, because conscious of time. Adam, I know, or I'm sure you paid a close interest in the government's announcement earlier this week. Obviously, other than the hope that travel would be permitted soon, was there any additional support offered for businesses, or are we waiting for that in next week's budget announcement?
I think you're right, Chris. I think next week, certainly I put my eye on next Wednesday, I believe it is. You know, as Martin mentioned earlier, it was nice to get a mention specifically from the Prime Minister in terms of the industry. Whether that transpires into direct support, you know, there's been some calls for travel-specific help. That would be ideal. Whether that's in the form of specific grants or some kind of aid, that would be most welcome. I'm not that hopeful. I think in that respect, I think that furlough will get extended. There's certainly the rumours. I'd like to see the VAT extended. That hasn't, it wouldn't particularly impact tour operators operating outside of the UK, but would still help nevertheless with some parts of the industry. But certainly, I think furlough would be the greatest help. What we've seen with travel companies is that they've been able to utilise that, but perhaps not as much as other industries, having to deal with refund credit notes and still do a lot of administration, and therefore not fully utilise that. So I think that would be the best tool to get for the longest period of time possible to allow that to correct itself, if you like, as we go down this bumpy road, and hopefully see some real return to demand and kind of real numbers, not just high percentages.
Have there been any dates suggested on the rumours for extending the furlough? You know,
from what we've heard, June is the furlough. But I think the important thing in that is, before we'd seen a tapering off. You know, I think September, October last year, we started to see it, you know, taper down to 60% or so. That kind of may play a factor in this as well, as the economy starts to open up. You know, we're already seeing tax rises planned as well on corporation tax. You know, the Chancellor does need to start to claw some of that back and take a more conservative approach. So that may be happening as well with the furlough scheme.
And I mean, based on what you know now, what do you see as the key pinch points for operators over the next 12 months? Certainly,
you've got this week, I think yesterday, VAT had the extension. The portal is now open, so you can extend that. But not just VAT, you've got other kind of financial outflows about to happen in terms of repayments. Certainly, CBILS is going to be a big one for many people, depending on when you took that. But we had some clients that were certainly early out of the blocks in terms of obtaining funding, and now what we're starting to see is those repayments come into play. You know, if you've got other taxes that you had negotiated with HMRC time to pay, they will certainly start to come out of the business now. So really, as demand is only starting to come in very slightly, and we open up the economy, you've got various things to start paying. I think one good thing about the announcement this week and this optimism that seems to be in the air is the RCNs, the refund credit notes. We'd always spoken about this cliff edge. What I'm hopeful for now is that actually there is much more confidence. We would have had, well, you know, lots of people on the call would have potentially had customers that have been moved once, twice, 3 times, and we had this idea of, you know, fatigue setting in and people being in kind of different situations personally, and that may have resulted in demand for refund. Hopefully now, with this optimism and confidence coming back into the market, they'll actually turn back into bookings and therefore be less of a cliff edge or impact for tour operators.
That's certainly good news to hear.
Something I'd love to see, Chris, in the budget, and I don't know that we will, and certainly not seen anything signposted, but just going back to this point about equity, and travel industry needs it. I think all small businesses need it. Well, there's the haves and the have-nots. Anyone in consumer-facing retail, restaurants, or everyone in that sector is hurting. And I think a creative approach to encouraging investment, because there are people who have become infinitely more wealthy throughout this crisis, you know, depending on exactly where your business is. And what the government could do is help just open up the taps a little bit and make it more attractive to invest in small businesses, because it's small businesses that powers our economy, and that's what we need them to get back up and running. The worst case, I think, would be all of these businesses, they become sort of zombies. You know, they exist to pay down their debt, and sooner or later it either fails or it just doesn't go anywhere, but you either can't make enough money to cover yourself. And so that could look something like ultimately loan forgiveness on some of these CBILS loans. It might be that they end up writing them off into some sort of equity instrument. But before then, if there was something that they could introduce, there's already EIS and SEIS schemes. You know, Adam knows far more about them than I do, but ultimately they are invest some money in this business and there's a tax break, and if it all goes wrong and the business fails, you get a recovery. Makes it very attractive, actually heavily incentivizes wealthy people to invest their funds in small business. And if those investments could be enhanced or widen the scope, that would encourage people to come back to the sector. And we're talking to a couple of businesses at the moment who, you know, these are people who are fortunate enough to have very wealthy friends, and they're saying, well, what we could do is give 15%. I own 100%, or I and my wife. I can give 15% to these wealthy guys, and if we can agree on a valuation, there'll be silent partners. There'll be some attraction for them, both in the product in the interim, but also in 3 years' time when we're able to sell the business or something. But there's a heavy tax break for them if they do that. That's what they need to get out of it, because if they don't, it will become something like the merchant acquirers or the bond guys or the regulators that stop them trading. You know, because the conversation I'm in every day with the likes of the CAA are, we're not renewing this guy's license, and because there's too much, the balance sheet is underwater. You know, they've got the liabilities are too high. They need some additional funding. So whether we see something like that, it might be too early at this stage. Maybe that's something that comes out in future, but I'd love to see something like that.
Yeah, I think there are rumours that France are looking at some innovative policies that involve kind of debt and equity instruments. Apparently, it's a revival from a very old policy, but certainly would be useful for the UK to take note of that and come up with something, you know, as innovative and different from what we've seen in the past. I think it was interesting yesterday that you know, ATOL had said at the conference that they're treating CBILS as quasi-equity, which is super useful for this renewal cycle and maybe the next. But actually, it's not equity; it is debt, and it does need to be repaid. And so, at what point do you change that? You know, how does that impact businesses going forward, and you know, regulatory assessments and accreditations, etc.
And obviously, talking about the regulators, no doubt you've got a number of clients due to renew financial protection with ABTA and ATOL in March. Have you got significant concerns in general about how that's going to go, given the more information that's being requested, and you know, the potential worsening balance sheets that will be shown in this latest renewal?
Well, yeah, I think it's very early days. Obviously, we saw the CA yesterday at ABTA's conference. Didn't really give too much away or any opportunity to ask any questions. There is this wealth of information that has been asked for, that we'll see how that pans out over the coming weeks as to what that means for tour operators and travel companies. I think previous cycles gone past, we've gone through, you know, relatively pragmatic approach. I think in some cases, certainly that I've dealt with, Martin might have a different opinion, but you know, we got there in the end and actually got most of the people through it. It's not particularly easy, but in the cases that I dealt with, certainly CA were fairly forthcoming in being, I guess, innovative in a way and accepting certain things to grant licenses.
I think March is going to be really challenging. Conversations I'm having at the moment, and a lot of the approach, the CAA particularly takes an approach to looking at really in depth the larger ATOL holders. Anyone over 20 million of ATOL turnover, they would see as large, and the long tail of smaller businesses, they don't spend too much time looking at, to be honest. And so the larger companies are all seemingly being pushed down the route of trust account. I mean, every single day we're probably getting a call now from another company that has been told you've got to do this by some time scale. You know, they're a little bit flexible on time scales, but the tone of the CAA presentation yesterday didn't, like you say, didn't give much away, but it felt like some sort of recognition of consumer monies was the way they were going to be heading. They're consulting, so they're issuing a formal consultation sometime. They said early this year, and initially it was meant to be first quarter. I don't know if they're still on track to do that, but we'll get more insight, I suppose, when that comes out.
Yeah, I think they said they're releasing a consultation shortly, so it's supposed to be early March. And one of the things that they did say was that it would focus on how ATOL holders fund their operations and strengthen their financial resilience. I mean, as you said, Adam, they declined to offer any detail on this at all, or answer any questions. I mean, what are your thoughts, and what do you think we can expect to see? Do you think trust accounts is going to feature heavily?
Unfortunately, I think I was probably over-optimistic a few weeks back, but certainly from what we've seen, and Martin mentioned, that in that arena at a certain level, there are pushing people that way. Inevitably, that it feels like at the moment that that's going to filter down. Over what time frame, I'm not sure. But just generally improving the financial resilience is going to be tough. I mean, you know, there's the only way in which you can do that is, demand bookings and getting profit back into the business to strengthen the balance sheet again. With such long lead times that we mentioned earlier, it feels like that's a way off. It's still that kind of bumpy road ahead. So it certainly feels like there would need to be a long lead time and some, a sympathetic ear to that from the CEA for that to actually happen.
Once upon a time, for our sins, Chris, you and I both worked for the regulator. And so if you cast your mind back to those awful, awful days where, and put that hat on for a moment, you look through their worldview, what they are very, very worried about, and again, it's a theme we've visited in these webinars before, is as companies trade out of things, imagine someone fired a starting pistol on Tuesday morning, particularly in that mass market, it's now a race to get bookings in and bums on seats and cash in the door. And partly that's because you want to be first and it's competitive, and partly it's because you need cash because you can see problems down the line. It becomes an intensely competitive market where everybody outprices each other, undercuts each other. What the CAA are terrified about is creating bigger problems down the line. You could point to Thomas Cook and Monarch as recent examples of that. Businesses that were trying to sell below cost to get cash in the door to survive, having an impact on the whole market, because the minute one of those mass market guys discounts, everybody has to discount. And they really do become zombies, and they really do store up problems. They take in all of this customer money and then they go bang at the worst possible time in the peak season. And then the CAA has to mop up the pieces. So they're very worried about keeping all of the license holders I work with on very short leads. They're maybe given a 12-month license from a sort of optical point of view, but actually that really is a 6-month license, or come back and see me in 3 months and prove to me that you're still on target. Because that's what they're worried about, is if they just let people go crazy and sell to get cash in the door, it creates systemic problems down the line.
David, obviously I know you have an ATOL. Would you welcome a consultation from the CAA, or do you have any concerns on that?
No, I don't have any concerns. I think consultations are always welcome because any system can be improved. What that improvement will be will depend on various factors, and there are a lot of different vested interests in there. I'm a full advocate of protection for client monies. But what format that needs to be, is open to greater minds than I. But yeah, absolutely, I'd welcome the CA, not only consulting, but listening as well. But obviously, I think Martin's point's a good one, and you guys know, having worked there, that, that they have their brief from their powers that be. And unless that brief changes, they will have to fulfill their regulatory obligation. And again, that has to be respected, but hopefully they can be done within the parameters of understanding more about the business. And I think, with this past 12 months and COVID having such an impact that was unforeseen, I think their mindset might be different than it would have been 12 months ago because of the implications of what's been going on and the forward possibility of so many businesses struggling and potentially not being able to renew. So that, the trust angle one is something that comes up frequently in these calls and these conversations. It isn't something we have looked at or will look at, but it is something that as an industry will become more and more prevalent. There's no doubt there. And it was interesting also, I think it was Adam earlier said about ABTA and monies and refunds, but we had a situation back in autumn where a travel agency failed, and we just about a week before refunded some client money, the client deposit for a booking that wasn't going to be traveling. And the agent didn't pay it out to the client prior to them going out of business. We thought we would be able to claim through ABTA, and we couldn't, and it's now been confirmed this last week or two. It's been confirmed by ABTA that any refund money is given by operators to ABTA travel agents to pass on to clients. If they fail before it's passed on, there's no protection for the operator, and we have to pay it out again. And we believe that's manifestly wrong and manifestly unfair. So what we've done, as well as many other operators I know that I've spoken to, we now refund the client directly through the agent still. If the agent is around, even agents that are still here, we will refund the client directly with that agent knowledge, because we don't have the client contact information, so that then there is no exposure to us should an agent fail with that money that is genuinely ours or the client's. You know, it's not necessarily wanting to do that. I think we're just being a little bit of self-preservation, but I think it's prudent for the whole chain as well. And it means that we don't get a double hit on some refund money as we did back in autumn.
Yeah. And I think the you know, the diagram or the picture that Martin you had on your slides of the was it the pain chain, or have I just summarised that? But yeah, I mean that just showed kind of an example of that, isn't it? Really, it's just all these different people interacting and the pain that everyone faces in all these circumstances. There's definitely lots to consider, and I don't know whether the CAA will include that within their consultation, or whether it will be very narrow in terms of just ATOL and the fund and what their financial criteria will be. I guess we will see, hopefully in the next few weeks, but we all know how these things slip. So yeah,
absolutely.
Watch this space. Well, thank you everyone for joining us. Thank you, David, Martin, and Adam, for what's been a really interesting discussion. This will actually be the last webinar led by us at the Travel Vault, as we'll actually now be passing the baton to our colleagues at TTC. For those of you who regularly join our webinars, you'll know that we work closely with them, and they've supported us through the last 12 months, for which we're really grateful. And in taking over the reins, we think that TTC will be able to cover a variety of topics and attract a wider range of guests. And Travel Vault members will of course continue to be invited. Details of the next webinar, I understand, will be circulated shortly, but Martin, do you want to say a couple of words?
Yeah, we'll do. Firstly, thanks for Adam and I for having us on. It's been great to be part of these webinars, and thanks to Chris, because Chris, you've done a fantastic job of hosting them. As you say, you're passing the baton on, and I will treat that with the utmost respect and try and carry on your good work. Chris is going to spend, I guess, go back to the important job of keeping Travel Vault going, and all of the hard work that she does there, and the very important work she does there. So. Other than that, I hope you wouldn't notice any difference at all. Same format, same sort of topics we'll be covering, and Adam and myself will be there. So maybe the only difference is that you'll get an email from Lucy at the TTC instead of Lucy at the Travel Vault. So please don't ignore it, and yeah, it'd be great to if you could join us.
Thanks. And obviously, in addition to the webinars, we'll continue to keep members updated through newsletters and emails. And as always, if you have any queries, myself and the Travel Vault team are always here to help. So please don't hesitate to get in touch with us.